Well, we do have some news today, but not a lot. The markets are closed today for Juneteenth. So I'm going to dive into numbers that are good through close of business yesterday. Just to give a review, because this was Fed week. The Fed did meet. They released their minutes yesterday. Chairman Powell took a few questions, and we were able to go line by line and word by word in the Fed statement to see what changed. Not a lot, y'all. And absent from the Fed statement was any acknowledgement that we have seen significant weakening in the labor markets. There was no mention of that. In fact, they said that employment remains strong and healthy. They didn't change any language there, nor did they acknowledge that we are largely at goal with regard to recent CPI, PPI, and PCE numbers. We're within 0.5% or less of where the Fed's target is of 2% on each of those measures when you look at the headline number. So why is the Fed holding off on cuts? Well, that is the trillion-dollar question, y'all. When you look at the dot map that they released to show where their voting members in an anonymous way are projecting rates to be, it's kind of a snapshot into what their future votes are going to look like. That dot map still shows 2 quarter-point cuts in 2025. And they have reduced guidance for 2026. They're now only predicting 1 cut in 2026. The Fed statement further acknowledged that they expect the labor market to soften a bit, but they also expect inflation to increase. They expect it to be at 3% or higher by the end of this year, even though we have seen the trend line heading in the opposite direction. This owing to the fact that the Fed, and in particular Chairman Powell, seems to be at war with tariff policy, and he is reflecting that by standing firm in a very restrictive monetary policy at the Fed. So that's very frustrating to have a Fed that's at odds with the administration because we have not seen inflation resulting from any of these tariffs. We have seen threats of tariffs resulting in many cases, better trade deals. The tariffs that have remained in place have had the net effect of increasing dollar strength a bit, which offsets some of the inflation concern. So it's a mixed bag, and it is a bit baffling if it's not political to explain why the Fed, when central banks all around the world are easing their monetary positions. So we're kind of the standout in the world in staying firm. So that's given us the following results in the CME FedWatch tool, y'all. This is looking at Fed funds futures to see when cuts might happen. There is now only an 8% chance of a cut at the September 30 meeting. Going into the Fed meeting, there was a 15% chance of a cut at that meeting. Just 3 or 4 weeks ago, there was a 35% chance of a cut going into that meeting. It's now only 8. There's now a 64% chance of a cut on or before the September 17th meeting. So we're likely to get a cut by late fall, but that's looking the earliest opportunity that we're going to see one, y'all, unless we see something significantly happen with regard to economic data that would change that equation a bit. Here's where interest rates were through close of business yesterday, according to Mortgage News Daily. 30-year fixed rate conforming loan in their daily tracking survey was 6.87%. That was up from a week ago of 6.85%, owing in large part to the Fed not acknowledging the good news that on the inflation front and the weakening labor market in their statement yesterday. That was a bit of a surprise for the markets. We thought there would be some moderating language there. There wasn't. We will see very likely higher rates tomorrow when the markets open again. 6.99 is where we were 30 days ago, y'all. So rates are a hair better than they were this time a month ago. I will say, though, that the last 30, 45 days has been pretty flat with regard to pricing. We've seen little 8-point variances, and that's about it. It's going to be interesting to see how the market digests the Fed minutes that will potentially impact bond trading on Friday after the market has recovered from the holiday. So in any event, I'm going to keep an eye on it. You know I always do. I geek out on these numbers, look for the best opportunity for your clients to lock in on the best possible pricing that we can predict, y'all. Given that, we're always honored and blessed to have your referrals. All my contact info is on the screen. Stay blessed, stay safe, and we will talk to you next week.